On Friday, we have the US core PCE print, and it's likely to be a very volatile event. A few things to note. First of all, the core PCE is the Fed's preferred measure of inflation. And as a result of that, it's likely to result in some significant volatility because the Federal Reserve is laser focused on bringing down inflation. The recent resilience of the US economy, particularly that very strong non-farm payroll jobs report on Friday the 3rd of February, putting in 517,000 jobs added to the US economy, well above the maximum expected of 305,000 jobs, really resulted in a change of pricing for the Federal Reserve interest rate perspective. And we can see here that interest rates from short-term interest rate markets have just generally been ticking higher as a result of strong US economic data. The bottom line is that investors are expecting the Federal Reserve will have to be more aggressive to show some kind of slowing impact on the US economy because it's pretty resilient, particularly in the labour market, and services are showing a resilience and a bit of a divergence from manufacturing. We also saw retail sales very strong at the last print. So as a consequence, investors are expecting a 25 basis point rate hike and an outside chance, 20% just under, of a 50 basis point rate hike at the next meeting. This has been resulting in dollar strength and sending equity markets lower. So this means that the actual core PCE print will be very influential. The headline is expected to come in at 4.3. Now that is down from the prior of 4.4 in December. So investors are expecting a fall. But what we need to look for here is if there's a bigger than expected fall, say the PCE index comes in below 4.2%, the month on month comes in below 0.1%, and then we see the year on year coming in below 4.8%, so maybe 4.7 or 4.6, then we might see some of that aggressive Fed pricing unwind, and we'd expect a nice pop upside in the S&P 500, so you could see an intraday opportunity there. If you just look at the S&P 500 on the weekly chart, you can see that price has broken out above this key trend line and now is testing this major trend line around this 100 exponential moving average. It's an absolutely crucial technical area, and any reasons for buying on weaker than expected inflation means you can really easily define and limit risk underneath that 200 exponential moving average and look for a run up to that 40, 50 region. Have to see where price is on the day, but the key thing is if we saw a big miss in inflation data, that would represent upside in stocks, it would represent upside in gold, upside in silver, and upside in Bitcoin, as well as general dollar weakness, so it should support the euro US dollar higher. What we've talked about here in this video is fundamental analysis surrounding the US core PCE print. We want to put seasonals, fundamentals, and technicals all together for a great trade. We have the latest high probability swing trade ready for you right now to grab. Just click below this video and we'll send it to you straight away.